To recession or not to recession? That's the question. Because in the last couple of days, we've got more economic data. We also know that the Fed did not cut rate. It might maybe cut rate, probably, let's say, it will cut rates in September. How much? We don't know. Now, what exactly has happened? This is the data. So what happened? Well, weak economic data. Manufacturing contracted, jobless claims rose, and construction spending fell, fueling recession fears. Fed hints at rate cut. This was on Wednesday. Powell suggested a possible September rate cut, but market sentiment turned cautious due to weak economic indicators. Meta's strong earnings initially boosted the market, but gains were trimmed as investors assessed the results. I believe Hershey's and Wayfair also reported, and they said that, well, there is some consumer weakness. Although I think a week or so ago we had American Express say the opposite, that the consumer is quite strong. So, okay, we'll see what happens. Focus on upcoming reports. Yes, the market is still anticipating strong results or expects strong results from the likes of Apple and Amazon. So jobless claims rose to 249,000, the highest level since August 2023, suggesting a cooling labor market. Manufacturing PMI fell to 46.8, indicating a deeper contraction in the manufacturing sector. And as you can see right here, under 50, that indicates a contraction. More recently, well, we have gone down previously. That was late 2022. We have gone down. Then it rose back up. And maybe right now we will be continuing to go down. And if we don't see any rate cuts anytime soon, although I'm pretty certain, let's say that we're going to get one in September, the question is it a 25 basis points one or a 51? And of course, stock market on Thursday and Friday was pretty red. Now there is this thing called the SAM rule. What is that? Well, the SAM rule is named for noted economist Claudia Sam, who has accurately forecast every US recession since the 1970s. Basically, the rule says that if the jobless rate based on a 3-month average is a half percentage point above its lowest point over the previous 12 months, the economy has tipped into a recession. Friday's job report technically meets the SAM rules criteria. The jobless rate in July rose from 4.1% to 4.3%, taking the 3-month average more than a half point above the 3.6% average 1 year ago. So of course, when that happens, huge headlines, algorithm plays their part, everybody's freaking out, sell your stocks, sell everything you own, we're all going to die.
Ha ha!
No, right? I hope you can all understand. Recessions happen, slowdown in economies happen as well. And in this case specifically, many people say, okay, even if we are in a recession, is that bad? How bad of a recession? If it's just a mild one, then it's just a pure reset, right? We've had huge inflation. We had COVID. So lots of people got laid off. Then suddenly, lots of people got hired again because you needed people to work. You couldn't find the right one. Wage increases. So inflation happens, etc., etc. Now, you've got people that got laid off because, well, those huge companies are like, you know what? Actually, we don't need that many people to run that company. Plus, plenty of other companies are saying, look, the rise of AI, stuff like that. AI can do a lot of that work. We need less employees. So layoff happens. Plus, you also have immigration, right? New folks coming into the country, they are also suddenly looking for jobs. And as you know, or maybe you don't know, but when you come to a new country, you don't have, let's say, the same luck to find a new job. So that can also tick the scales one way or the other. In this case, unemployment went up. So to suddenly say, oh, there is a recession, by the way, I don't know what the title of this video might be. Maybe it's clickbait, maybe not, I don't know. But to suddenly say, oh, sell everything, it's over, stock market crash, a recession, we're all going to die, in my opinion, is a little bit of an overreaction. Now, what it might be is an opportunity to buy good companies at better prices. Now, again, I don't know when the market will rebound. Maybe we'll see a couple of extra red days, maybe not. I don't know. But if you can find great companies at better prices thanks to days like we had Thursday and Friday, okay, good for you. Good for you. Anyways, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We're really close to reaching 50,000 subscribers. So hit that subscribe button. It's free. You can always unsubscribe later. Now, let's go over the portfolio, which of course took a huge hit. So the couch investing portfolio had a horrible week, down close to 5%, while the S&P 500 is down 2.12%. Since the start of this challenge, the portfolio is actually down closer to 4.7%, while the S&P 500 is now up 7.2%. Of course, as you know, in the last couple of weeks, we were much better positioned. But like I said back then, I have the positions that, well, when the market is green, the portfolio is going to be very green. But when the market is red, especially when it comes to macro and cutting rates, then yes, this portfolio is getting hit quite hard. Did I add to a couple of positions in the last couple of days here? No, not in this portfolio. Will I add? Yes, most definitely. To what positions remains to be seen, but probably again in PayPal, in Meta, in Google, in Tesla, in the big ones. Palantir, let's see what happens on Monday after they report their quarterly earnings. Intel, I've talked about that. There is a next video coming up, so more information about that. Lululemon, Celsius, Snowflake, still yet to report their next quarterly numbers, so we're going to see what happens with those companies. So yeah, last week the portfolio took a huge hit. But we'll see. In my opinion, better days are ahead. You just have to pick the right companies. I know some of you think these are garbage companies. Fine, don't buy them. I bought them. My luck or my garbage, as I say. So, as I say...
Well, you got me. By all accounts, it doesn't make sense.
Anyways, let's have a look at some more commentary from some companies that did report earnings and did share some information about the consumer. For that, Crossroads summarized it quite nicely for us. So, what do PayPal, Visa, and Amazon say about the consumer? PayPal, we are also seeing ongoing normalization of loss rates within our off-balance sheet US consumer revolving portfolio. Visa, in the US, while growth in the high-spend consumer segment remained stable compared to prior quarters, we saw a slight moderation in the lower-spend consumer segment. As for Amazon, consumers are being careful with their spend. We are seeing signs of that continuing into Q3, which is also why their guidance was a bit weaker than expected. He continues, things are somewhat weak, so these are the companies that basically alluded to that. Sherwin-Williams, the DIY that prefers a home center environment, is certainly feeling the pressure as we talked about in the prepared remarks earlier relative to inflation, depleted savings and household debt, so those pressures are very real for that consumer. As for Hershey, today's operating environment remains dynamic with consumer pulling back on discretionary spending. Heinz said consumer sentiment remains cautious. McDonald's, beginning last year, we warned of a more discriminating consumer, particularly among lower income households. And as this year progressed, those pressures have deepened and broadened. LVMH, this is a luxury segment, the aspirational consumer in the United States, as we commented in the first quarter of the year, is a little bit under pressure due to inflation and higher interest rates that are taking both the toll in terms of purchasing power, particularly in the United States and to a lesser extent in Europe. The consumer is much more price conscious, is looking for more value across, so maybe you see the higher income consumers that they're not going to the expensive restaurants. Whirlpool, they noted a trend for lower consumer spending on high dollar discretionary items. Burberry, the weakness we highlighted coming into fiscal 2025 has deepened and the current trend persists through Q2. We expect to report an operating loss for the first half. Chase, you are seeing slightly higher unemployment, you are seeing moderating GDP growth, and so it's not entirely surprising that you're seeing a tiny bit of weakness in some pockets of spend. As for the category of things are fine, Carvana said, the strong customer demand we experienced in Q1 continued in Q2. MasterCard, their success was supported by continued healthy consumer spending. As for Coca-Cola, consumer sentiment in aggregate is actually pretty strong, pretty resilient. Within that, there are some softer spots. Eaton, we continue to see strong demand across our markets due to electrification, energy transition, and reindustrialization. So, you've got here mixed sentiment, but overall, does this scream to you as, recession? No, just people maybe being a bit more responsible with their spending. Of course, there are still different brackets. Well, I mean, still, there are different brackets of people. The wealthy, the bit less wealthy, but still enough money to spend, the average, and then the lower income. Of course, the lower income always gets hit first because they have to, well, live paycheck by paycheck. Then you've got the average, which sometimes also live paycheck by paycheck because they live above their means, but not all of them. I mean, some of them, I've seen the averages in the United States. You earn so much money and you still have to live paycheck to paycheck. I don't know how you do it, but okay, get a grip. But to say that we're going into a bad recession and all of that, no, that's too early to say. Should we have had rate cuts already? Yes, I do think that the Fed is late again. They were late with the rate hikes and now they're late with the rate cuts. Could they come in with some emergency cut? Maybe, but I think they'll just wait for September and then cut by 50 basis points instead of 25. Is that enough? Remains to be seen, but yeah, I don't think the economy is suddenly crumbling down, the consumer has no money anymore, etc., etc. No, there is some weakness, but I think that weakness is healthy. That's just my opinion, of course. I think there will be some great opportunities to buy good companies at better prices. When will that happen? I don't know. I don't have a crystal ball. I wish I did, but I do not. So that's about it for this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.